Oh man, does the Fed have a dilemma? Yesterday I spoke about CPI being higher than what the Fed wants. Okay, actually, let's go to it. If you look here, all items CPI, that was at 2.7%. But so CPI is already at 2.7%, and in core, if I try and follow it through, was at 3.1%. So what I'm trying to get at with those numbers is the Fed wanted, and they said that their target, 3.5 years ago, was 2% inflation. Well, we're CPI is at 2.7, and core is at 3.1. So and job market is at an all-time, not all-time low, but at a very low. Negatives would be all-time low. We're still positive at adding jobs, but nevertheless, super slow job growth. Inflation's still way above what Fed is targeting. Trump is asking for a Fed rate cut of 50 basis points. And to be fair, if the jobs numbers came out before the Fed funds meeting, even one day prior, we know that the Fed would have cut by 25 basis points, but that didn't happen. So there's an even bigger cry for an even bigger cut for the next Fed fund meeting. But wait, CPI didn't come in the way they wanted to, and now PPI didn't come in the way they wanted to. So this is inflation for companies, okay? I.e. the tariffs. So let's take a look real quick. Month over month tariffs, 0.9% for inflation for tariffs. Not good. That's higher than expectations. I think expectations was 0.6. And I think final demand, which is core PPI, was supposed to be 0.3 and it's now 0.6, showing that maybe these tariffs might have had something to do with inflation for companies. But if you look at it, maybe not the biggest deal. It's bad. It's 0.9. That's huge for 1 month. For 1 month, that's not good. 0.6 for 1 month core, not good. But let's go ahead and take a look. Let me pick this up a little higher. This is year over year. Year over year is very important, guys. So the Fed, again, is looking at this year over year, 3.3 CPI, and core CPI, less food, energy, and trade, 2.8%. Okay, so it's higher than expected. So what am I getting at? So basically, if inflation isn't being beaten, meaning inflation is still going up higher than what the Fed wants, and they're going to attribute it to tariffs, like Jerome Powell said in the past, how is he going to lower the Fed funds rate? But how is he not going to lower the Fed funds rate if our jobs number, look at May 14th, after being revised, 19,000 jobs in May. That's nothing. 14,000 jobs in June. That's nothing. Remember, it was originally 147,000, then 133,000, now 14,000. So 19,000 jobs in May after revisions, 14,000 jobs in June after revisions, and they're saying 73,000 jobs in July without revisions yet. So that might be another 10, 12, 14,000. So how does he not lower the Fed funds rate so that money can get cheaper and then it can help stimulate the economy? Because obviously if you help stimulate the economy, it does build inflation, and we haven't tackled inflation. What are you going to do?